Good afternoon, everyone, and welcome back. This is Daily Trade Analysis with a quick market update for today, Tuesday, June 13th. Big day today, CPI data. We got inflation rate year over year, 4%. The previous one was 4.9, and we were expecting 4.1%. Month over month, we are still increasing 0.1. We were expecting 0.2%, so better than expected on the slowness, but core inflation rate month over month is still as the previous one and as expected 0.4%, and core inflation rate year over year 5.3% as expected, but still above 5%. So before going nuts and FOMOing in and being super bullish, let's have some factual data. So looks like inflation is cooling down and not progressing as fast as before. But we have to go to the details. Look at this. Food prices were still up 6.7% from a year ago, though eggs fell 13% in May and are slightly in the negative on a 12-month basis. But remember what Fed is focusing on: shelter and services. Shelter prices have risen 8% and transportation services are up 10%. If we go actually to the, let me also open the thing on the PDF. So remember that we are getting out of April and we are moving from May to May this year. So May 2023, we got 3.1%. And overall, year over year, we are excluding and we are getting out of the equation, out of the calculation, the big inflation data from last year. So that's why we are seeing aggressive decrease on the CPI inflation readings, but that doesn't mean that prices and all the underlying items are cooling down. The only thing that we are seeing is big months like April, May, and June last year, in which we had 0.9, 0.4, and 1.2 in June. The only thing we are seeing is those months getting out of the calculation. So hold on and let's see the details on the table. So food is still increasing 0.2%, and the big pullback, the big retracement that we are seeing is in energy. Energy, as you can see also right now in June, crude oil is pulling back a lot, is quite weak, and look at these readings. Energy services minus 7%, minus 5% for fuel oil, gasoline minus 5.6%, electricity minus 1%, gas services piped minus 2.6%. All this is good news, but the core part of the CPI is still sticky and increasing 0.4%. If we go to the services less energy services, the core part of the inflation focusing on services, we still have 0.4% for overall, with 0.6% on shelter and 0.8% on transportation services. So this is not as good as people thought. Still good news because we are seeing energy pulling back, but that is not enough. We need to see more progress on the inflation cooling down and focusing on services and shelter and transportation, and also food. Food needs to cool down. Services need to cool down. Shelter needs to cool down. So how the market reacted to this news? Well, at least we started just pulling back to this level settlement, the blue dot line, and we started creeping higher and higher, and we broke 15,130, the big level from more than 1 year ago. we established this pre-market high and we never revisit that level yet. Into the open, we chopped around and we started breaking down. Notice that the Nasdaq was super choppy, but S&P's was holding. S&P's is actually stronger than the Nasdaq, but that doesn't mean that these are good news. Nasdaq started going down on a nice trend until the pre-established pre-market high and settlement prices from yesterday. We put a pivot. We did what I like. This is one of the best patterns for me to trade. Establish a double bottom, double U into a pivot with higher lows, and we started grinding higher. We couldn't retest high of day yet. We have a big area of resistance up here after the open, and we still have pre-market high pivot there. We are holding, and this might look like a green day and hopefully continuation for the rest of the week, but remember that we have tomorrow PPI, so more news regarding inflation. But Apple is quite weak, minus 0.50%. Look at this gap down after hours yesterday. This is huge. If we take the measure yesterday, it gapped down 1.50% in after hours. Huge. Right now it recovered 1% and we are minus 0.52, but this is not looking strong. It reclaimed the previous all-time highs that we got from here. We false breakout 185 and we are since then trying to reclaim that level. We reclaimed the previous all-time high, so this is no longer viable, but we still have these all-time highs that we established and rejected at 184.95. Apple has several gaps below, the same as a lot of stocks, including the indices. S&P 500 has like 7 gaps down below that we didn't test yet. So be really careful with those gaps because those are for sure going to be filled in the upcoming weeks and months. So Apple is quite weak. Microsoft is also trying to reclaim his range bound between 323 and 336. It didn't test this gap down, not even this one down at 290. But still, if we check the 1 minute chart, we are seeing better price action than the Apple, but look at this selling off. Look at this sell off. This is not looking strong. The open was quite hard for a lot of stocks. Amazon, Google 0.40, barely in the green. If we check, I'm expecting Google to put a lower high here and continuing lower through this pivot on 122. At least reclaim this gap. Build and test the moving average on the daily. Nvidia is 3.48, but Nvidia has its own setup, its own fundamentals and technical analysis. So we are seeing quite a lot of squeeze today. And I think both Nvidia and Tesla are giving a lot of momentum to the overall market and to the Nasdaq. Tesla is really squeezing on options. 0DTE gamblers are all over the place in Tesla. Look at this. This is just 1, 2, 3, 4, a lot of green candles on the daily. And if we check the weekly, this is insane. 1, 2, 3, 4, 5 weeks, more than 1 month green, squeezing higher. And this is a move that it's mostly driven by options, by 0DTE option, and there are retailers all over the place. I think 265, this gap fill that we are now entering, that gap fill would be 262, might be feasible. And then we have this previous support that might be resistance, 270, really psychological levels. Tesla squeezing, Nvidia squeezing, but Apple, Microsoft, and the rest of the Nasdaq are not following suit. So that, coupled with the fact that inflation, in my opinion, are lackluster, because the only thing that is cooling down is the overall inflation, and that's because the statistical way of the calculation, getting out of those huge months from last year, I think core inflation is showing stickiness, and Fed is not liking that. I think Fed will not like that. We have still to wait for tomorrow for PPI, but in my opinion, this kind of weakness is due to that lackluster inflation data. Bitcoin is in the red, showing weakness, but small caps are actually pushing higher, 1.27% on the day. We are bull flagging and now resolving higher. If you check the daily, I think this zone around 191 at this pivot on the daily, it's a target for a lot of people, I think. And why small caps are stronger than Nasdaq? I'm seeing rotation out of Nasdaq, out of these huge big tech stocks that are super sensitive of high interest rates, and a lot of inflow into small caps and other parts of the market. RSP, how we are doing on the equal weighted ETF? Well, up 1%. And as you can see, we are breaking out. So this means that the rest of the market is actually having a good day, including small caps. Tech stocks were overextended, overvalued, and are now seeing outflows toward the rest of the market. And breadth is actually improving. 1% in the green today, below 50, above 50, barely. And I think we might see a pullback and then continue higher. Even though Nasdaq is pulling back, breadth of the market, the rest of the market is improving because there's a lot of investors, a lot of big players that are willing to take risk in those other stocks that are not overvalued, like Nasdaq and Apple, Microsoft, Tesla, that are super extended and do not offer those risk-reward ratios that swing traders and investors are looking for. So we are seeing actually a big rotation into those. All sectors are in the green. Consumer discretionary 1%, squeezing hard due to Tesla. And I mean, this is insane. I'm seeing aggressive options trading on the 0DTE on the options chain. And this week, with more than 5 million units expiring this Friday, remember that this week is quadruple witching day week, and Friday is that last Friday. We are seeing a lot of manipulation, a lot of gambling with the 0DTE, and Tesla is receiving a lot of love from those. Nvidia, I'm sure, is receiving a lot of options from those retails. But sectors are overall in the green. But focus on the important thing. Focus on the actual rotation that we are seeing out of tech for now, and the lackluster inflation that I think is going to hit a lot of overvalued and extended stocks on the Nasdaq. Gold is also in the red, 0.65% in the red. If we check dailies on the metals, we are still consolidating here, looking for resolution to the downside. I think this was the first leg down, consolidation, and I'm looking for another leg down for gold to reach this fifth retracement or the 200 moving average on the daily. Copper is actually seeing a little bit of love, but still with this look below and then reclaim. We are into 3 different levels here, but let's see how it happens, because how it ends up this month, throughout all this week, because copper and silver are actually diverging. Silver is setting off of this previous resistance, and copper is getting some love with a huge green candle. Let's see what happens, but there are a lot of players moving to other markets. Dollar is actually surprisingly weak, 0.32%. On the news, it sold off, as you can see here. Then it tried to reclaim. It did, but then we are seeing a lot of choppiness today on the dollar. I think a lot of people is waiting for tomorrow PPI to really establish huge positions, and yields are getting a lot of love. 1.50% on the 2-year, and on the 10-year 1.60%. Yields going higher is not good for the economy. Yields going strong is not good for the stock market. And we are not seeing signs of any slowdown on the tech stocks. I still think these are overextended and overvalued and do not offer any good risk-reward ratios and forward PE ratios for those big investors and big swing traders that are waiting for these stocks. So they are not waiting anymore. They are just trying to move money inflow into those small caps and all other parts of the markets that offer good risk-reward ratios because they were undervalued, and they are moving out of tech stocks because we are seeing signs of breadth improving and equal weighted ETF just going higher, despite the fact that Nasdaq is seeing a little bit of pullback. I still think overall market is going to balance, is going to equalize, but the question remains, when are these tech stocks are going to really correct and offer good values for all these people that are on the sidelines? That's a matter of time, but I would not want to be caught up here at 15,000 on the Nasdaq. There are plenty of other good and better trading locations. For example, down here for this little bottom that we established a higher low. Down here, I mean, there are a lot of setups that are healthy setups for this to continue higher in a proper way. We saw one pullback, second pullback. I'm sure this week we are going to see some kind of pullbacks. Let's see if we hold last week's high and last week low, we might enter again into this range. But I'm for sure certain that we are going to see a big pullback that will offer better values for those big players that are still on the sidelines. And if those are not on the sidelines and tech just sells off, I think market will offer better values in other parts of the market. For example, small caps, and for example, some other financials that are almost 1%. There are a lot of sectors. It's not market, it's not only Nasdaq. It went straight up following AI and a lot of gambler security for Tesla, Nvidia, and so on. But I think overall, we are seeing some kind of move from these big tech stocks that are overvalued to other parts of the market. That is good for the health of the stock market, but if you are overinvested in tech, you might see some pain in certain players that maybe are in a bad really situation up here or up here at over 15,000 on the Nasdaq. I still think if you are patient enough, you will have Nasdaq stocks at better values than this one. These are not good trading locations. There are better trading locations that is not this buy the dip forever or buy super high because it will continue higher. At some point, we are going to see a really nice correction for all the people that are playing on the sidelines. And I think that's all. Overall, Tesla still squeezing. Do you think Tesla is a good buy up here? I don't think so. Do you think Nvidia is a good buy up here? I don't think so. Do you think Amazon is a good buy up here? And I can continue on and on. I don't think we saw a good enough pullback in all these big tech stocks. I would like, if I was an investor, I would like for tech stock to really correct and then find good deals and good opportunities down here at key pivots. For example, on Amazon, on this one, on Tesla, we might see a retest of 207. Apple is offering also a big, huge gap behind around 170. Microsoft also is leaving behind at around 296, 292, 290, a big gap behind. All these gaps need to be filled for bids to take over again and provide support for a healthy move up. I'm waiting for those kind of moves. And that's all from my side. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecasts, market updates, and market recaps. I appreciate your time as always, but remember that the trading day is not over yet. We are still waiting for this afternoon price action. Nasdaq is putting higher lows into a huge ascending triangle. We might see a big squeeze into the afternoon, but we might also see a big sell-off into the afternoon because this kind of move was already there. There's a lot of shorts that are willing to repush and to re-add at these levels. So be really careful. Don't overstay your welcome, and remember that this week is going to be insane. Today we got CPI, tomorrow we will have PPI and FOMC in the afternoon for interest rate decision. Imagine what would happen if Fed raises 25 basis points. The market will just big time. So don't predict, just react. And be patient and disciplined because those and risk management are key for your success. Stay safe, everyone, and see you tomorrow.